Welcome back everybody to the Kamikaze Cash 3K Challenge. It's been a tough year for investors with the S&P skimming lows at 3,600, and after GameStop took another huge dive last week, I'm officially in the red for this season with an $80 overall loss, or about 2.2%. My goal for this episode is to get back into the green, but waiting for GameStop to turn around isn't going to cut it. I've been looking for a way to get this cash pile that I've been building involved in my trading, and I've figured out now how I want to do it. In the last episode, I showed Jpow's plan for raising Fed interest rates for the next few years. There is no reason to believe he will pivot from this stance, and this means the 2, 10, and 30-year bond rates are very likely to just march higher with it. I was listening to Bloomberg Radio, and they brought up some great points about this. If we look at historical data, the shortest-term Treasury notes correlate most precisely with the Fed interest rates, and the longer-term bonds also correlate, just less abruptly. But no matter how you slice it, Fed rates drive interest on Treasuries. And with the Fed targeting almost 5% interest on overnight borrowing rates, I expect Treasury rates to stay higher like usual. And as we know, as bond rates rise, their prices fall. Jpow pretty much told us flat out that Fed rates are going to keep rising. We should assume Treasuries are going to do the same, and therefore I want to be short Treasuries in order to take advantage of the falling price. Shorting Treasuries on Robinhood is not possible, so I instead decided to long an inverse Treasury ETF. The ETFs that inverse short-term Treasuries are pretty much illiquid, so I poked around for an appropriate ETF on Seeking Alpha. I was persuaded by convincing argumentation from Dr. Philip Braun that either TBF or TBT are the way to go. And I elected the 2 times leveraged TBT ticker because it has more expiration dates, and therefore I can run my PMCC plan. So let's get started here on Monday, September 26th. My portfolio is still getting destroyed because GameStop is down yet again. But let's open TBT, my 2 times leveraged inverse bond ETF, which shorts 20+ year treasuries. It's been on a huge run all year. I should have jumped in this boat months ago, but it's better late than never. VIX is already above 30 right now, which is reason enough to expect a bounce in the equities market and a dip in treasury rates. When I explained this play in Discord, some of the guys who use terms like Vega sensitivity and beta rebalancing said this is too risky. But frankly, I disagree. The risk is in the immediate term. Treasury yields probably do need to dip a little bit, and that's okay, because I'm going to open this as a PMCC. That's buying a long-dated call and selling short-dated calls. If Treasury yields dip in the near term, that's fine. My short calls will award premium, and over the next few months, the long call will recover as the market resumes tanking. For this PMCC, I'm going to flip to the January expiration so I can get about 4 months of life on this long call. In a PMCC, you generally want to buy the 70 or higher delta on your call. 60 is really pushing it. But this is a small account, and I don't want to put too much money into one call. I want to keep some cash for liquidity. The 28, 29, and 30 calls are all reasonable, but I think ultimately I'm going to take the 62 delta call at the 30 strike for $365. The delta is a little low, but I think I can still make this work. I'd rather save the extra $100 of premium rather than spend it on another 10 delta. And now I'll go to my short-term expiration and sell a covered call. My leaps at the $30 strike acts as collateral, and now I can sell covered calls against it to receive premium back. You typically want bare minimum 40 delta between your long and your short strikes. 40 is an absolute minimum, and 50 is really the better target. But the 10 delta strike on this week's expiration just offers such little premium. I'll just add a little duration to this trade, and instead sell the October 7th expirations. It's 2 weeks out. If I sell the $34 strike, that delta is 20, and that'll give me a 40 delta gap between the long and short strikes. I can get more premium by selling the 33, but my delta gap would just be too tight. So I will sell the $34 strike for $31, and that'll make my entire position cost $334. I'm buying the $30 call expiring in January for $365, and then selling the 2-week to expiration $34 call for $31. When that one expires, I'll just sell another one and collect more premium. My max gain on this is hard to specify because there's multiple expirations involved, and I'll sell several covered calls over the life of this PMCC. I'll exit if I double my money, including the premium collected. The max loss is not what Robinhood says. It's more realistically the price I paid, or $334, if TBT drops rapidly all the way through January. Now, if we look at Tasty Trade's mechanics, they'd tell me that I'm paying too much money for this PMCC because you don't want to pay more than 75% the width of your strikes in premium. My strikes here are $4 apart, so they'd say don't pay more than $300 for this position. I'm breaking some rules here by paying 83.5%. The way around this would be to sell the $35 covered call to make this a $5 wide position, and then I'd be paying 69% of the width. But the premium below the 20 delta is just too low. I'm not waiting 2 weeks to collect $19 in premium. I'll go with 34, and I'll enter to buy 1 PMCC. I'll see if I can get this to fill at the mid. That'll make it $329. Let's see if I can get my fill. And there it is, in at 329. It's not too bad. I do want to caution that the Dunning-Kruger curve looks like this. I started learning about bonds like 4 days ago, so I should be right about here. I know just enough to get myself into trouble, but max loss is like $330 over 4 months. I'll be fine. And if this trade fails, it's probably because equities are rising again and my regular portfolio is happy. So in the end, this can't go tits up. Let's time hop now to the midpoint of this trade, the afternoon of Friday, September 30th. On the bright side, I have achieved my goal of getting back to green. I am now proudly up about 0.5% for the challenge. On Monday, I was down to 3,360, which is a new low for this season. Again, GameStop is the culprit. And on Wednesday, the high was 3,680. So it's been volatile, but we're ending the week on a good note. My short bonds play is working out well so far. Bonds are tanking once again, so my Throwback Thursday PMCC is up about 17.6% on the week. But as you can see, most of that gain is just today. A single bad day can make or break this position, so I don't want to get excited yet. The Leaps is now worth $420, which is a positive omen. That's a $57 increase from where I bought it. Almost all the gain from the PMCC so far is from this Leaps. The short call expiring next week is just about flat. But if we look at the weekly, I was starting to get a little bit nervous around here when bonds tanked really hard on Tuesday, and I thought my short call might get busted. But TBT came back down into Wednesday, and we'll go into next week's expiration pretty much right where we started. I expect I'm going to keep spinning this PMCC for a while, and even though bonds should recover in the near term, I don't think they're going to sustain any kind of rally through the end of the year. My other position is of course GameStop. My short call will expire worthless for a $9 gain, but these meager gains are barely worth the clicks I spend entering them. GameStop has really taken a beating lately. Ryan Cohen is eventually going to sell his shares, and that's going to be the end of it. GameStop should have made an esports betting app instead of an NFT platform. I mean, imagine that, an esports app and an esports bar. I'm talking like Dave & Buster's, where you go into GameStop, you drink, you gamble on esports. That would be amazing. But instead, the company just wasted more money on this NFT platform nobody asked for. I think it might just be time to break up with GameStop. If I find that I need more cash to do some other strategy, I'll just ditch GameStop and move on with my life. She's just holding me back now. All right, let's enjoy the weekend and get ready for October. Alright guys, it's mid-afternoon on Tuesday, October 4th. The market is showing some real strength this week in what I believe is a relief rally. Lucky for me, bonds are dropping again after yesterday's rally, so my TBT position is still in play. There's this idea going around again that Jpow is going to pivot to a more dovish stance. He's addressed this before. He said he's not pumping the brakes anytime soon. I just don't see it happening, so I'm staying short bonds as long as Jpow stays hawkish. My portfolio is hovering around the $3,700 mark, and the big driver right now is GameStop. It's up about 8.6% on the day. Now, I'm only down $557 from my assigned price, so go me. Yesterday, I sold a covered call at the $30 strike, and today, that contract is worth twice as much. But it's still out of the money, and honestly, I would be fine ditching GameStop at $30 if I get assigned, so I do hope it hits. And then there's the fun one, the poor man's covered call on TBT. This position has been all over the place, but ultimately, I'm up $1 from my entry. The Leaps is at $335, which means I'm in the red $28. But meanwhile, the call that I sold is down 85%, so I'm making $29 there. There's only $5 of premium left on this thing, so that's basically no protection if TBT drops, and there's still 3 trading days left this week. I'm going to close now and anticipate TBT rising later in the week, so I can resell a covered call for more premium. I'd rather do that than sit on this and collect like $1.33 a day for the rest of the week. So let's open up the position and buy to close the short call for, it looks like it's going to be $4 now. So I'll buy back for $4 and let's see if I get a fill. And there it is. So that'll put me at a gain of $30 even, and I'm satisfied with that. The $34 covered call wasn't doing anything for me at this point anyway. I'll look for a rebound so I can resell the TBT covered call for better premium. I'd probably sell the one that's expiring next week. Okay, so let's fast forward into Wednesday, so just the next morning. My portfolio came back off because GameStop refuses to go green and is back down another 7.5%. But the good news is that TBT did jump pretty hard, so I'm going to sell the short call at the $34 strike, expiring next week for $31. This call is up 84% today, so this is a lot more premium than I would have had if I rolled yesterday. And if TBT drops this week, it'll give me more protection than this week's emaciated 34 would have given me. It looks like 31 is actually the bid, so let's see if I can split it, and I'll take $34 premium. Alright, I'll wait for that to fill, and that's it. Moving on. Alright, let's wrap up the week here on October 7th. I'm still in the green at least, with my portfolio up $200 this episode. But the market gave back all its gains this week. It started on a good note, but by week's end, we're struggling. SPY is down almost 3% today, and that puts us flat for the week. Absolute fatality. However, I am green for the week since my bearish bond PMCC is working. But still, this $3,560 account is only up 1.7% overall. So what have I achieved in the past 3 months? Dick. I have achieved precisely dick. The big loser for me is still GameStop. I'm down over 23% on it and it's just killing me. But I do have this short call that will pay out $14 this week. I'll probably sell a near the money covered call next week and take higher premium just so I can get out of GameStop. The position I really care about though is of course the TBT PMCC. The leaps is up over 19% and I think it's got more room to run. Meanwhile, the short call gambit I went with did not succeed. This week's short call would have expired worthless for an extra $4, but instead rolling to next week put me $3 in the red. It's not a big deal, but it is a lesson in patience. Overall for this episode, my realized gains are $30 on TBT, $14 on this week's GameStop, and $9 on last week's. That's a $53 realized gain. Unrealized, I'm actually up another $143 from both GameStop shares and the TBT leaps. I'm going to put the realized gain to work by purchasing a share of TBT itself. I want the actual price of TBT to appear here instead of having to search for it. So let's buy one share at market price, and that'll fill with no problem. And I really just now realize that I could have added it to my watch list instead of buying it, but whatever, it's done. I'll use the remainder to buy a share of QYLG. You gotta average down into the buy and hold positions. I'm really leaning toward ditching GameStop and just using the extra cash to enter bearish spreads on the market next week, but you'll have to tune in to find out. I think I need to turn up the heat further on this challenge. Don't forget to check out Tendies and their Brokerage Connect service. They'll take great care of you. Thanks for watching everybody, and I'll see you next time.